welcome to a very special edition of the Urban Debate on Magicbricks Now, India's first property channel. I'm Kavita Krishnan. So it's budget day, and since this morning we have been focusing on the home buyer. However, the investor is an integral part of the real estate landscape. In this discussion, we are going to focus on the investor and see if this budget, the budget that Arun Jaitley presented, whether this budget will spur investors in the real estate sector. With me is a very, very esteemed panel. I have Sunil Rohokale with me of ASK, and I also have Ramesh Jogani of IPAL. Both of you all gentlemen, welcome to the show. Let's begin by talking about REITs. Now, REITs is something that all investors were looking forward to in this budget, and the FM has delivered. He did give an exemption on, he did remove DDT. Do you think that is enough? Will that spur REITs?
So it's a positive move, and this was a long-term standing demand from the industry, and I think the industry should be happy with it. But unfortunately, there are very few commercial players in the REIT segment. There are only few large institutional investors from overseas who have gone and amalgamated commercial property. So it will affect a very minority section of the whole trade. But it's a positive development. And in time, I think we'll see commercial plays a very integral part if you compare it to any other part of the world. So in time, we'll see investments coming into this segment.
But is just the removal of dividend distribution tax enough? Because, you know, people were, I mean, all those developers who were looking to launch REITs were also asking for removal of MAT. Sunil?
See, I'll tell you, you can't be asking all the things at one go, to my mind. Having REIT regulation getting cleared after so many hurdles of multiple budgets, to my mind, we as a country have created a new segment for attracting a foreign direct investment, as well as domestic investors who are looking at regular, I mean monthly or quarterly income through real estate. So I think it is a significant paradigm change as far as an industry is concerned. Look at this particular regime from a perspective of liquidity. So much of liquidity which probably was sucked because of the commercial income yielding good quality assets would now get liquidated by listing these REITs on the capital market. So my guess is it would be helping A, creating liquidity to developers, B, the demand for commercial real estate anyway have started showing a positive trend this year onwards. Though last 5 years was difficult time for commercial real estate, but the rental yields have stabilized, the vacancies have come down, and I think this clearly means the incentive for the new set of developers, keeping in mind the India growth story going forward. So this asset class will have a life, and that is more important at this point of time. Though at the same time, we would have to clear all those small things.
You're saying that we will see REITs being announced, REITs being listed by the end of 2016. Is that possible?
I will be very surprised if one or two REITs do not get listed in this particular financial year.
What kind of quantum of commercial space are we speaking about when we're talking about REITs here?
See, if you look at the large, as Ramesh has rightly mentioned, that not every developer is actually having this portfolio of income yielding assets. There are a handful of developers, but they are spread out across the cities. Like we have DLF having a large portfolio of income yielding assets. We have investors like Blackstone having a large income yielding assets. We have Embassy in Bangalore having assets with them. We have Prestige in Bangalore having assets with them. We have Godrej having some assets with them. So there are developers in Pune, developers in Chennai are sitting on income yielding assets. So my guess is that the number may not be as high to start with, correct? But my sense is that if $1 billion, we do not see an attraction for the foreign direct investment by virtue of REITs in the next 12 to 18 months time, I don't think we would really be saying that this particular REIT as a regime have really yielded a good result.
$1 billion REITs in the next 12 to 18 months. Ramesh, what do you think?
Even I would agree with him, because this is a natural progression for any real estate or any evolving economy. So we've been into traditional commercial and residential. Now we're getting into the listing space. We had listing of developers which did not perform really well, but this is rental yielding properties which are getting listed, and
Yeah,
everybody could
That's an
partake.
point you make about we are seeing that all the developers who are listed in the stock markets, the companies are selling at lower than the list price right now, and they have not really performed. There are very few companies that have really performed well in the stock market. So having said that, when you talk about REITs, are you more confident of how REITs will perform as an asset class once they,
So
list?
what typically happens, like when real estate companies were listed, the valuation game was not understood well by the investing community. They gave a lot of valuation to land banks, which never really took off. So everything got discounted. Similarly, even in a REIT, we'll see this shake-up happening because the investor wouldn't know how much to attribute towards cost, how much to attribute towards fees, taxation. So we'll see the first earlier REITs, if there's euphoria, being listed at a premium, and the prices might slide off in the coming time. But so it's only with a few players experimenting and a few investors investing, then you realize, okay, what is in for the investor. So we'll have those ups and downs, but we need to move on to the next step because we are creating monetization, we are creating liquidity. Because of this, we might have bonds being issued against this REIT. So some sort of depth is being created, and which is very, very essential for any growing real estate economy.
Right. Before we move on to the other announcements in the budget, one more question about REITs. We have seen that the stock markets have been very volatile of late. Globally as well as within India. Do you see people actually pulling money? And I'm talking institutional investors here because REITs are not yet open for retail investors. Do you see investors pulling money out of the stock market and pumping it into REITs, into real estate?
See,
Not really, because you're looking at for a REIT investor is different from a stock investor, because REITs, so when REITs are listed, the very idea of REIT listing will have retail participation, and he's looking at a minimum yield and with the expectation that he's going to get some capital gain. So you'll have a lot of money moving out from fixed kind of a yield, the savings and the fixed deposit, which will move into REITs.
So how will the returns actually compare, Ramesh?
So if you look at typical savings, you would get around 4 to 5. If it's a fixed deposit, long-term fixed deposit, you'll get 6 to 7. So any investor would be looking at comparable yields of 6 to 7 with a quarterly or an annuity return for them. And if the markets are doing well, then you can also see capital appreciation happening. So that's what
So you are convinced people will move from fixed deposits to REITs. Sunil, what do you think? Will people actually pull their money out of fixed deposits? They're giving you around 9.5 to 10% right now.
See, I think the REIT as an instrument probably first will attract foreign direct investors. We will have the global investors who are looking at the yields in the ratio of 9 to in the range of 9 to 10% are happy if they could able to take home anything between 5 and 7% dollar returns. I think that is a good return as far as they are concerned. This money is not fungible. This money is very different than the money what you talk about, which is FII money, which is a hedge fund money. This money is a long-term money which sits into an income-yielding asset, which is backed by a solid asset, which is backed by a solid tenants. And this returns get more attractive as the interest rate cycle starts going down. So if more the interest rate going down, these yields would look more attractive. And as the economy start doing well, the capital gains coming out of the asset valuation also would add delta to the returns. So my sense is, as far as the institutional sophisticated investors are concerned, this is a extraordinary instrument. But whether the retail investors in India, I think there has to be shift in the mindset, because Indian real estate and Indian real estate investors talk about all the time very high teens or maybe in early 20s kind of returns, and to them this is not really an instrument. This is a fixed income. This is a fixed income debt instrument.
Yeah, I don't quite agree, because for a large institutional investor, he does not need it to get listed. He can buy property. He can earn that 8-10%. It is this large investor who wants to monetize his investment by giving out, so if he's bought at a 10% yield, he'll sell it at a 8% yield. And that time you need retail participation. A REIT will never perform if there's no retail participation because you're listing REIT. A large institutional investor does not need to list REIT. So you need the retail investors coming in. And retail investors, so you'll see people who have affinity for fixed income, and those are the guys who are going to move in. So it is a facility for an exit or monetization for the large investor. So retail participation has to come in, and that's why it's listed.
Correct, Ramesh. The retail investor definition in the REIT is given 1 lakh rupees a unit.
What I want to ask you both here is, we did see gold ETFs come in, paper gold in that sense. And REITs in a way is paper real estate. Gold ETFs didn't really take off. Do you see Indians who want to touch and feel their assets in that sense? Do you see them shifting to
So there is a difference between gold and real estate, because gold is very stable in its pricing. We've only seen a few years which have seen huge appreciation. Whereas real estate, Indians as a rule love real estate, but they cannot partake in commercial real estate. So this is the only way they'll be able to participate. It might take some time. Money might not flow immediately in the first year, but you'll see some of them being listed. So if Blackstone has a lot of assets, I'm sure he would want to list it, and he would not be able to dilute 100%, but he would be able to dilute 10%, 15% or 20%. And as and when the understanding of the market reaches out to the retail investor, we'll see more participation coming, and we'll see more institution coming and buying these assets and then listing it in REITs as REITs.
And eventually the retail investor will also be allowed to invest in REITs, which currently retail investors are not allowed to invest according to the SEBI rules. Now, REITs obviously is going to free up a lot of money, like you said, Ramesh, earlier in the discussion. Now, do you see all of that money being pumped? Do you see a huge amount of that money being pumped into housing, and especially affordable housing, considering that the budget has had such a lot of announcements for affordable housing?
You're talking in terms of REITs, or you're talking now we moved on to affordable housing?
Yeah, we moved on to affordable housing. Now, like you said, there will be money that will come out of REITs. There will be money that will flow out. Do you see money coming into affordable housing then? So
money won't come in because it is affordable housing. Money will only come in if it's a profit-making venture. So if you look at the announcements which have been made in the budget, affordable housing has been given a boost by saying, okay, if you approve the plans before June 19 and deliver the project in 3 years, then you can have 100% tax exemption. But the only problem is they've not defined limits for how much area, because if you're doing a large township of 100 acres, it's not possible to construct, build and sell in 3 years. So they need to come out with further clarification. If it's a smaller project of 1 lakh, 2 lakh, 3 lakh square feet, it's understandable that one will be able to deliver in 3 years. So so we need to get more details on it. If it's a blanket 3 years for irrespective of the size, then I think it's a non-starter. Only very few will get in.
But since you're talking about size, let me also take you through some of the things that the finance minister announced. Now, most of the tax deductions that are being given on homes measuring 30 square meters in metros and 60 square meters non-metros. Essentially, they are staying true to RBI's definition of affordable housing. But how realistic are these definitions really? And do you see this actually, encouraging developers to go out there and build more affordable homes, and investors, in turn, being encouraged to invest in these projects?
Okay, let me address the 30 square meter thing in urban metros. If you look at Mumbai, Delhi, Bangalore, all the buildings out there are all 30, 40 stories plus. And imagine if you further reduce the size, you'll have some 20 flats on a floor. And to consume that FSI, I really need to go to the 30, 40 floors. So at least in Mumbai, it won't work, because you don't want the 30 square meter guy doesn't want to have such large maintenance cost in terms of lifts and other expenses. So in Mumbai, I think it's a non-starter where 30 meters is concerned. Yeah, but non-metro cities, 60 meters might work. But the biggest challenge for non-metros or beyond the city limits is affordability. Even if you drop the prices and even if you manage to build and sell, developers are struggling. There are no real buyers because people don't mind staying in a smaller place in pathetic conditions, but they want to be within city limits. So, you need infrastructure, you need connectivity,
Ramesh,
you need a lot of things.
That. I want to get Sunil in on this. Tell me this, you have investments in a lot of cities out of Mumbai also. Do you see this actually working there?
So let me step back for a minute regarding the question that if you get so much of money out of REIT, where the money will go? Okay, I think we've not addressed that issue completely. That money, please understand that money is going to go in deleveraging the balance sheets. The money, today the developer balance sheets are leveraged. These all income yielding assets are built by developers with the help of the banks through construction finance, through lease rental discounting. So I think all the money probably developer would give a priority to repayment of loans. That probably would ease out his leverage on the balance sheet. So that's a part of the money I could see immediately going, and that means some amount of leeway and a legroom for a developer to really go for the next level of projects with some amount of leverage or a private equity. That's the first part. Okay. Second part, as far as the affordable housing is concerned, see the 30 and a 60 square meter homes may make the subject quite vicious. Really, do you see people really coming and staying in 300 square feet in Mumbai? Answer is no. But there will be some innovative people who would work around with studio apartments. There are demands where single individuals who work in the city look for some home which is smaller in nature. But my sense is that in Mumbai city, the large part of such assets are getting created out of redevelopment. So I think the incentive would have been really for a redevelopment of slums, redevelopments of the existing Mahada societies, redevelopment of existing societies, and if they could able to construct those houses which are small in size, would have been a better option. But at this point of time, the cities like Pune and cities like Bangalore, because the 4 cities what they have covered is Mumbai, Delhi, Kolkata and Chennai. And 25 kilometers away from those cities also, you can actually take a benefit of 600. So 600 is not a small number, but I think every city has its own charm. You can't really construct only 600 because 600 is the concession given to you. You need to see what is the ecology of that particular micro market is all about. So people do like little bigger homes. So the home sizes could be 550 to 850. So I think it is a very tricky subject at this point of time, but definitely it is an incentive.
If it becomes 550 to 850, like you said,
yeah,
then you lose out on the tax exemption.
Absolutely. So I think people have to carve out a portion which probably not every project need to be an affordable housing project. There is a segment of the society who is looking at the 550, and there is a section of the society who is looking at the 850
coming to the
as well.
affordability part.
So
and I think it's 30 and 60 square meters.
Yeah, I think at the end of the day, it is to do with size and price. Both are equally important, and that makes the affordability and not really a size. Because size really doesn't define the affordability. It's the price per square foot and size of the apartment also makes affordability. So my sense is affordable housing incentive of this tax break is alone not going to be sufficient driver, coupled with the reduction in the interest rate going forward, which will spur the demand for that 600 square foot or 300 square foot houses. And my guess is that there are some developers who would plan those assets and they would get benefited out of it. So I think it is definitely a cheer, no doubt about it. There was hardly any action because we were feeling hopeless in the industry. I think this hope of reviving the affordable housing.
So essentially you're being happy with whatever's been given to you. Ramesh, you're saying something.
I was saying is 60 square meters is a very decent size. And obviously the smaller the house, more affordable it becomes. But the problem is the markets. The problem is affordability itself. 60 square meters or 40 square meters, like people outside city limits, even if 60 meters is the definition, people are building only 40 square meters. They're not even going to 60 square meters.
They're building 40 square meters, but they're selling it as 80.
No, I'm talking about 40 square meters. There are now some areas are like lump sum prices. So you can take it the way you want, whether it's city or whether it's lump sum pricing. But the bigger challenge is being able to sell, because the minute you go into the affordable bracket, your infrastructure is not there. Transport system is very poor. Colleges, also, all that needs to be addressed for it to be really.
They have given a thrust to urban infrastructure in the budget, whether it is through roads or like we saw in the rail budget, they are trying to build suburban rail networks. So they are trying to ensure that
Kavita,
there
it'll
is
be
that
too
last mile
late for the
connectivity.
developers because I have to get my approvals by 19 and I have to complete in 3 years. By the time all this pans out, it will be way beyond the time limit set out by the
So you're
budget.
essentially saying it's going to be a non-starter.
It is a non-starter. It is absolutely
No,
a
I
non-starter.
think we should not write off like that because we are only talking about the metro cities. There is a city like Nasik, there is a city like Kolhapur, there is a city like Coimbatore. There are cities where probably the 600 would come handy to those tier 2, tier 3 towns like Indore and even Jaipur and even part of the outskirts like Thane, not Thane, maybe Kalyan and Dombivli and part of the Panvel where 4,500 rupee per square foot price, a 600 square foot house would mean 30-35 lakhs. Coupled with the new incentive for the home buyer of that additional benefit coming to him, 50,000 additional tax break on his interest income, may become an additional incentive for him to really make it viable.
But from pure investment perspective, say I have, I want to invest in that 30 lakh bracket or 40 lakh bracket. Does it make sense for me to go and invest in projects like these?
I don't think these projects are meant for investment, by the way. These projects are only meant for the first-time home buyer. If you are a first-time home buyer, if you want to create an asset of your own, which you feel more stability for you and your family, I think that's the whole approach.
Okay,
An approach is not really for the investors.
Let me put it this way. Both of you all run funds, manage funds. Are you enthused enough by what has been announced in the budget, as regards affordable housing, to actually go and invest in an affordable housing project?
Affordable housing, according to me, is an initiative which needs to be taken up by the government. I don't think private developers and fund can really assist. A lot more has to be given to the industry if you really want to kickstart affordable housing. So for me, affordable housing, there's not enough commercial benefits for my investors or for the developers. So I would stay away from it unless there's a lot more being given by, because it's homes for everybody. That's the dream Prime Minister has. And just giving a income tax benefit, out of which even Matt will take away again around 12 to 15% back. So that's not real incentive for one to go in because of this announcement. And even if I get into affordable housing, it has to make enough money because unless it's a win-win situation, it has to be for the landlord, for the developer, for the investor and for your end user. It has to be a win-win situation for everybody to partake in affordable housing. So I don't think it's just this announcement will induce me to go and invest in affordable housing.
Sunil, what about you? Will you put your money there?
I agree on some of the aspect what Ramesh has mentioned, that this has to be having a commercial side of the investment for a private equity investment into an affordable housing project or any other project. Why only affordable? So I think commercial considerations are the most important. The assumptions of that investment is also equally important. So my sense is today, if you look at, we do invest into projects where the apartments are at 35 lakhs to even 50 lakhs in the city like Pune and even part of the Chennai. We have invested. So we would look at this closely, but it is not the sole reason for us to really change our strategy to affordable housing because there's a tax concession here. Because there's an inherent demand in that segment. There has to be a technology of construction to really build it on time without any cost escalations. There has to be, demand is very much existing to our mind. But the micro market, what you are choosing, need to have that social and physical connectivity to really see that. So we have invested in the past. We'll continue to invest, but that has to have financial viability for such projects and not really meant to take the tax benefit only.
So you'll wait and watch and then slowly invest.
What I'm saying is that any private equity investor cannot invest keeping in mind the tax exemptions. There has to be financial viability in the project, and tax exemptions are additional benefits to you.
It's not just the tax exemptions. There is this whole, ecosystem in a way that is being built to make affordable housing viable. Sure. The government is pushing for it. Developers are saying that they're going to at least in Maharashtra, they have tied up to create affordable housing. And now you have a budget which has come up with tax incentives. So keeping in mind all of that, does affordable housing then emerge as a viable asset class?
Not for the next few years, because we need the infrastructure, the ecosystem to be built around. So that we don't see happening in the short term.
REITs is far more attractive at the moment.
Even REITs, like I said, we really need to see how it pans out. You don't need to rush to the first REIT which is being listed. We need to see, you need to be more diligent about it, how it pans out, because we've seen mutual funds being listed the first time and people have lost money. We don't want that to repeat. And so we'll have to be more diligent about it. I'm not rushing for REITs, so I'm not rushing for affordable housing, but we would like to wait and watch and see how it pans out. So nobody likes to miss out on an opportunity, but it has to be a studied opportunity.
Right. Very quickly, I need closing comments from both of you. We've seen the rail budget, we've seen the union budget. Both of them laid a lot of thrust on suburban connectivity, on connectivity to the periphery, to the city centers. Now, based on all of this, if, like I said earlier, if I had a budget of 50 lakh rupees, where should I be investing in this real estate market? What would your top 3 picks be?
So I would like to be closer to the city centers. So if you look at Mumbai, there's Vasai Virar, then closer to Thane, whatever you get. So at least you are in close proximity to the city as far as Mumbai is concerned. And likewise, how close you are to the city. But if you go beyond Mumbai city, and if you look at Chennai or Bangalore, wherever there's affordable housing has been constructed or it's defined as affordable housing, you'll see a lot of construction which has started but has not taken off. Only very, very few have been very successful in being able to build and deliver. So you need to be very careful. So if my pick would be extended suburbs of Mumbai.
Extended suburbs of Mumbai. Sunil?
No, I don't think I recommend anybody to really invest right now. This is a market for the end user, and this is the market, I'm again repeating, this is a market for sophisticated private equity investors who can control the assets, development, and the cash flow of the project. And I don't think a time has really come for people to really put money of 50 lakh rupees with the intent of some great infrastructure. So this is a market for only home buyers, end buyers.
And my take is prices have never been so cheaper than the previous years. So this is the time to go and buy.
So market for the end buyers, not really for the investors, though there is enough hope for the investors. REITs have got, REITs got the green signal last year in a way, but the removal of DDT has given REITs the go-ahead. We can expect to see a REIT or 2 listing by the end of the year, but like both our guests on the show, Ramesh Jogani and Sunil Rohokale just told you, this is the market to buy. This is a market for the end user. Markets have never been better. And prices have never been better. So if you are in the market to buy a home, the time to buy is now. Thank you very much, gentlemen, for joining me on the show. And thank you very much for tuning in. We'd love to hear from you. Do get back to us with feedback, with questions, and keep watching Magicbricks Now.